Good afternoon. Let's get it started in here. Mottek On Money. Let's do some business here in the 4 o'clock hour. We're doing more at 4 weekday afternoons right here on Mottek On Money, 790 KBC. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money live on the air. Also streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks ending lower today with the Dow and the small caps getting hit today as equity saw across the board declines. The Dow tumbling 533 points, coming off an all-time high. The S&P 500 down 44 and the NASDAQ down 126. Looks like 10 of the S&P 500's 11 sectors lost ground, with energy the only holdout of 0.3% today. According to MarketWatch, tech stocks have retreated sharply, in case you haven't noticed, in recent trading days, with investors streaming into previously left-behind areas of the market, including small-cap names. After the bell today, Netflix taking the spotlight, reporting second-quarter earnings that beat analysts' expectations. The stock slipped about 2% in after-hours trading as Netflix missed revenue expectations for the current quarter. Netflix shares had closed down today, down to more than $4 at $6.43 and change. According to one analyst, the NASDAQ's troubles might only be getting started, as technology names could be heading for a crash similar to the lengthy bear market that followed the collapse of the dot-com bubble. That's the opinion of a Soc Gen analyst. In a note to clients today, the often bearish strategist by the name of Albert Edwards challenged every pillar of the bull case behind the artificial intelligence boom, which has helped drive the major averages to record highs. Speaking of AI, we see NVIDIA bucked the trend today and closed higher, up more than $3 at $121 and change. Ray of sunshine for real estate, mortgage rates dropping from last week, and a positive development for the housing market, with affordability, of course, very much in focus, especially here in this area. The average rate on the 30-year fixed-rate mortgage is back down to 6.77%. That's the lowest we've seen since the middle of March, according to the latest survey out today from mortgage giant Freddie Mac. A lot of political uncertainty these days. Donald Trump is set to take the stage at the Republican National Convention to accept his party's nomination and give his first speech since he was cut off mid-sentence by an assassination attempt last weekend. Meanwhile, on the other side of the aisle, Democrats at the highest level are making a critical push now for President Biden to reevaluate his election bid, with former President Obama expressing concerns to allies and Nancy Pelosi privately telling Biden the party could lose the ability to seize control of the House if he doesn't step away from the 2024 race. I'll discuss the latest with Susan Shelley, columnist for the Southern California News Group, also host of the Howard Jarvis radio show, which is heard Tuesday nights here on 790 KBC and our great sister station, the Bay Area KSFO. Her latest op-ed article, by the way, is titled Gavin Newsom's Pipe Dream Goes Up in Smoke. Price of oil slipping a bit today, down 3 cents in New York to 82.82 a barrel. Brent crude in London edging higher by 3 cents to 85.11 a barrel. Healthcare stocks have been in focus lately, and they took a tumble today, weighing on the S&P 500. It's a week-long decline in the mega-cap tech names expanded in the broader market. Eli Lilly stock, for example, down about 6.5% for its worst day in about 3 years, as investors expressed concern about intensifying competition among obesity drug developers. Meanwhile, gold hitting all-time highs. All that glitters is gold today, buoyed by its use as a hedge against inflation, and also central bank purchases around the world offering hints on the prospects for industrial metals such as silver and copper. We see gold today settling at $2,456.40 an ounce. Price had reached a record high settlement of $2,467.80 an ounce earlier this week, and an all-time high of $2,488 and change on Wednesday. I'll talk about that. I'll talk about it with the expert Barry Stepler, precious metals expert, founder and president of Mint State Gold by Stepler & Company in Woodland Hills, and former president of the American Numismatic Association. But first, on your money, the markets, the economy, the whole works now. Joining us live, Gabriel Wisdom, managing director at American Money Management and author of Wisdom on Value Investing. A lot to unpack today, ahead of President Trump's speech tonight at the Republican National Convention. Gabriel Wisdom, give us your assessment of things here at the moment.
Well, Frank, the markets hate uncertainty, and there's certainly plenty of it to go around. And then we've seen the political tug of war at the Federal Reserve. This would be the fourth presidential election for Jerome Powell at the Fed, and he's being pushed on both sides to either keep rates high, which is what the Republicans want, or reduce them, which is what the Democrats want, which would stimulate further growth just in time for November. In fact, former President Trump turned up the political pressure earlier this week when he said that lowering rates is something that they know they shouldn't be doing. And Powell's response to all this political pressure is to talk about his apolitical approach. And he's emphasized that the only criteria that matters is data on prices and jobs. But nonetheless, all focus is on interest rates, and we're seeing pressure on the big cap names and the market in general because it's very possible we'll see higher interest rates for longer.
On the air live with Gabriel Wisdom with American Money Management. We see in the Financial Times today President Trump warning the Fed chair not to cut rates before the election, and he also recently said he would not fire Fed Chair Jerome Powell, would likely let him finish his term. It was Trump who appointed Powell to begin with. And what about these latest statements?
Well, I'm not sure that the sitting president can fire the Federal Reserve chair because it's somewhat of an independent agency. So Powell stays, for another couple of years. What would a Republican sweep in November change things in the short run? Would it boost the federal deficit? I think we can be fairly certain, regardless of where interest rates go or what happens at the Federal Reserve, that Republicans would extend the Trump 2017 tax cuts beyond 2025. I think we'll see that right away. And it's possible that they'll rein in spending, and that would certainly be a good argument for lower rates.
Another report from Reuters says President Trump said he would consider Jamie Dimon, who's the head of J.P. Morgan Chase, the largest bank in the United States, for U.S. Treasury Secretary. That's something else that's come up recently. Kind of reminds me when Donald T. Reagan, who headed up Merrill Lynch during the Reagan years, became Treasury Secretary back then. What do you think of this idea of having the head of the largest bank become the Treasury Secretary, possibly?
I can't think of anyone more qualified to be the chairman of the Federal Reserve than Jamie Dimon. I mean, he's forgotten more about banking than most of us ever learned in many years of graduate school. Yeah, and there's this growing conversation on the Trump policies and inflation and tariffs and what's going to happen. We know Biden has been trying to blame everything on Trump, and the Trump people are blaming everything on Biden. That's just how it works. But this is a very, very interesting time, and I wouldn't put too much credibility on the polls. Remember how Hillary Clinton was expected to have a landslide victory in 2016. That didn't happen.
On the air live with money manager Gabriel Wisdom, and of course the political uncertainty adding to uncertainty on Wall Street. We see the volatility index, the so-called Wall Street Fear Index, the VIX index, spiking recently, so we're keeping an eye on that as well. In the meantime, another hedge on uncertainty is gold, also hedge on inflation. Curiously, we're told inflation is coming down, and yet gold has hit a record high this week. What about gold here?
Frank, I've been pretty positive on gold for some time, as you know, and only because inflation adjusted, it still hasn't caught up to the old highs of 1987. So it should be higher, but the world is beginning to sort of inch toward a gold-based monetary system by default. Practically, central banks, including our own, have been accumulating gold. It's interesting to note that for the 180 years that we were on a gold-based system until the early 1970s, there was very, very little inflation. Problem was there was very little money. So we do need to increase the money supply. I think gold as an industrial metal there's every reason for it to be higher along with silver. You find it in every smartphone.
All right. What about this commentary today from that SocGen analyst who's very nervous about what's happening with this recent sell-off in the NASDAQ and predicts this tech sell-off could be worse than what we saw when the NASDAQ died years ago during the dot-com bubble days. What do you see ahead?
Well, he may be right, but he's been bearish for so long through an amazing period. Just the Magnificent Seven types of stocks and technology have added some $16 trillion in value to the S&P 500 since late 2022. So, it's better to be approximately right than 100% wrong. And unfortunately, he's been very wrong, but he could be right this time. In fact, Jim Covello, who's one of Goldman Sachs' top stock analysts, also said that he is concerned that the artificial intelligence buzz won't pan out. He says that once that becomes clear, that it's not going to be the great savior. It won't be the same as the internet. It won't change the world like the printing press did. And he said when that happens, there'll be an adjustment in pricing, and we may be at the beginning of this now. After all, most technology transitions in history have been very, very expensive, and AI is no different.
And J.D. Vance's stance on tech companies also getting a lot of attention. Talked about that with Charlie Gasparino 24 hours ago on this program, and there have been some write-ups about that as well. He gave that big speech last night. What about that factor as well? If there is, in fact, a second Trump administration, how tech companies, especially social media companies, how they might be treated?
Well, J.D. Vance is an insider to the degree that he was a venture capitalist under Peter Thiel. I do have a friend who was the chairman of a major bank in Silicon Valley that everybody might know the name of, and he'd had occasion to meet with Thiel and J.D. Vance. He said he was a quite impressive young man at the time, but he's the strongest pro-crypto voice in politics at this time. Apparently, he owns at least $100,000 worth of Bitcoin. He's heavy in oil and tech names, and he's publicly criticized SEC Chairman Gary Gensler for his attitudes towards crypto. So it's going to be interesting.
All right. What about Bitcoin? I know you follow the action. I don't think you have the laser eyes on just yet, but we see Bitcoin certainly has rebounded since last weekend, right now above 64,000 at last check. What do you see happening there?
Inflows rather into the 11 new Bitcoin exchange-traded funds broke $1 billion over earlier this week. And the inflows probably have everything to do with the polls for Donald Trump and now J.D. Vance. Russia is talking about accelerating the creation of some kind of infrastructure for payments and cryptocurrencies. But like Venezuela, they're doing this to get around the sanctions, bypass the international sanctions. And this is true for China and Belarus and the Iranian central banks are talking about the same kind of thing. So the cryptos continue to be an underground kind of currency, and as soon as the exchange is made, they convert to the currency of the realm, which would be paper type money or digital money, but not crypto.
All right, and we've seen some action among the home builders lately as mortgage rates have pulled back, the lowest we've seen since March, mercifully, for those who are trying to afford a place. Which is almost an impossibility here. But anyway, mortgage rates dropped from last week down to 6.77% for the average 30-year fixed-rate mortgage. What do you see ahead for the home builders and on the mortgage front, and where these rates go from here?
Frank, we do expect interest rates to go down just a tad, probably in September, or not at all. But the fact remains that demand among first-time home buyers, the millennials, is fierce, and they're being financed in part by the International Bank of Mom and Dad, which is helpful. I don't know how sustainable that is, But one National Association of Realtors survey that I saw recently found that most people who have who are looking to buy a home wouldn't buy one, and most people that own a home and would like to sell think it's a great time to sell. Well, there's something wrong in the push-pull there. So if rates come down, then real estate rises. It's been the worst performing sector among the S&P 500 sectors, by the way. It's up barely 0.5%.
All right, getting new attention today with these lower rates here. What about the big question here now, Gabriel Wisdom? Let me ask you, where are you putting money now and or taking it off the table?
You know, Frank, Moderna is on to something that's quite ambitious. You mentioned how Lilly sold off today, some 6%, and the recognition that there's more pressure on them with regard to the BCD drugs. There's more competition coming. And Moderna now hopes that their mRNA technology can battle melanoma and battle renal cell cancer. In addition, they think it holds hope for heart failure, Lyme disease, and cystic fibrosis. And this is the new trend. So I'm interested in some of the exchange-traded funds that hold Moderna, Pfizer, Lilly, all the pharmaceuticals that are finding new uses for existing drugs. I'm very excited about that. Additionally, a rising income stream is very important. It's an inflation hedge. It's a bird in the hand. Two sources of return there, dividends and appreciation. So I like the dividend aristocrats.
Terrific. Gabriel, thank you very much for that. We appreciate it. Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel, we wish you a wonderful rest of the evening, and thanks again for taking the call today.
Thank you, Frank.
Right out to the freeways we go now, here on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. Rough day for the stock market today. Dow down 533 points, coming off the record highs we hit this week. We're back to 40,665. The S&P 500 tumbling 44, back to 5,545. And the NASDAQ down again today, down 126 at 17,871. NVIDIA, the magnificent one, managed to hold on to a closing gain today of $3.10 at 121.09 after taking a hit yesterday. Apple sliding nearly $5 at $224 and change. Netflix moving lower by $4.42 at $6.43 and change. Netflix earnings in focus this afternoon. Walmart, which has been hovering at or near record highs, pulling back today, down 21 cents at $70.82. AMD, another big chip giant, down nearly $4 today at $155.77. Tesla in the plus column of 73 cents at $249.23. We see the yield in the 10-year note now at 4.19%. That's the one that impacts the fixed-rate mortgage rates. And sure enough, just as we indicated earlier this week, with that yield coming down, the mortgage rates dropping from last week. In fact, the lowest now we've seen since mid-March. A ray of sunshine for real estate here, with the average 30-year fix back down to 6.77%. Taking a look at the cryptos now, Bitcoin's been flying high again lately, but still off its all-time high. Bitcoin up about $500 now at $64,030. Ethereum up about 20 at $3,433, and Doge at the moment at 12 cents. Gold hitting record highs this week. I'll talk about that. I'll talk about it with the precious metals expert Barry Stupler, who will be joining me live coming up in the next half hour. But let's get the latest news for you right now on 790 KABC. Mottek On Money continues here, 790 KABC. Former President Trump taking the stage at the Republican National Convention this evening to accept his party's nomination for president again and give his first speech since he was cut off by an assassination attempt last weekend. The assassination attempt shaped the week at the GOP convention. Speakers and delegates have repeatedly chanted, "Fight, fight, fight," in honor of President Trump's words as he got to his feet and pumped his fist after Secret Service agents killed the gunman. President Trump has appeared at each of the first 3 days of the conference with a white bandage on his ear covering a wound he sustained in the shooting on Saturday. And some of his supporters have started putting bandages on their ears, too, on the convention floor. Meanwhile, Democrats at the highest level now are making a critical push for President Biden to reevaluate his election bid, with former President Obama expressing concerns to allies and Former Speaker of the House Nancy Pelosi privately telling Biden the party could lose the ability to seize control of the House if he doesn't step away from the 2024 race. Let's bring in Susan Shelley now, columnist for the Southern California News Group and host of the Howard Jarvis Radio Show, which is heard Tuesday nights right here on 790 KABC and our sister station in the Bay Area, KSFO. Her latest op-ed article, by the way, is titled Gavin Newsom's Pipe Dream Goes Up in Smoke. Susan Shelley, thank you very much for coming to the line here this afternoon.
Thank you, Frank.
Quite a op-ed article I see here. Yeah, tell us about the Gavin Newsom article, and of course he had hitched his wagon to President Biden. Give us your assessment here.
Well, he made a decision that his best path to the White House was to be a loyalist to President Biden, and he was in Atlanta at the CNN studio the night the vacancy sign went up behind Joe Biden's eyes, and ever since he's been sort of swimming in place, trying to make the argument that Biden is the best choice in November at the same time that the whole Democratic Party is just melting down behind him, trying to get him out of the race. So Newsom has been really in a difficult place. He's drawing very small crowds, which is interesting because he thought of himself, I believe, as a celebrity governor, but he goes to Pennsylvania, New Hampshire, Michigan, maybe 100 people, 200 people at the most. And that's not terribly impressive. It's certainly not the kind of thing that Bernie Sanders received when he toured the country. He was filling arenas with this terrible message about socialism, but still, he was filling arenas. And Gavin Newsom, every bit the socialist, is not filling arenas. A couple of hundred people showing up on a summer day to hear him.
On there live with Susan Shelley. And keep going, Susan. I know you have a lot to unpack here. With Gavin Newsom's record as governor getting new attention lately, with the state crime numbers coming out recently, and then, of course, the bombshell announcement from Elon Musk that he is pulling out of California. SpaceX, which had been headquartered in Hawthorne, is now moving to Texas, and also X, formerly known as Twitter, leaving the Bay Area, also heading to Texas. So perhaps Governor Newsom getting new attention and all that.
He should get attention. He should get negative attention for his terrible record. His record really deserves a presidential disaster declaration because from the very first moment that he came into the office and reversed what he had said about ending the bullet train, he said the bullet train wasn't feasible as envisioned, and instead of ending it, he doubled down on it. And now we're still paying for it. He ended the death penalty, though voters had said they not only didn't want to end it, they wanted to continue it a little faster, and Newsom ignored them. So that was right at the beginning. And then from there, he shut down the whole state for COVID. Everybody remembers how abusive that was and how much worse it was in California than in other states. It was unnecessary to keep the schools closed that long. It was a favor to the teachers union. It was really unspeakable. And what's happened now with Elon Musk is that Newsom has signed a horrible law, a dangerous law, that forbids schools from having a policy to inform parents if their young children are expressing gender dysphoria. If they decide that they want to be known by a different pronoun or a different name or a different gender, the school may not have a rule in place that requires the parents to notify the children. The teachers to notify the parents. And this is very troubling. And it troubled Elon Musk enough that he is moving his two companies. He said that is the last straw. This and other laws have driven him out of California. So he is moving Twitter, or X, out of San Francisco. He's moving SpaceX out of Hawthorne. And the reason is, if you think about it, that when you are trying to hire people, the best.
All right, Susan, I think we lost you here, but we get the point. And for those who want to explore this further, be sure to check out Susan Shelley's op-ed column in the Southern California News Group, which includes the newspapers, the LA Daily News and the Orange County Register. The title of that op-ed article is Gavin Newsom's Pipe Dream Goes Up in Smoke. It should be noted that we saw Elon Musk tweeting out again today, or Xing out again today, depending on how he says it. The reason why he pulled SpaceX as well as X out of California is this the law barring school districts from having to notify parents of their child's gender identity change. Elon Musk tweeting out today, the goal of this diabolical law is to break the parent-child relationship and put the state in charge of your children. That is quoting the tweet that Elon Musk put out this morning. And Now, Governor Newsom facing a lawsuit over this controversial transgender law as well. The Southern California School District is arguing parents have a constitutional right for this kind of information and to be informed about their children's activities. Newsom's spokesperson called the suit deeply unserious, defending the law as preserving the child-parent relationship and supporting transgender student safety at school. Continue to follow this very, very closely. Susan Shelley, of course, the columnist for the Southern California News Group, and the latest op-ed article is Gavin Newsom's pipe dream going up in smoke. We will continue to follow that and more. Tesla, of course, has been in the spotlight this year. The stock has rebounded impressively. That, of course, is Elon Musk's other big property, which also moved out of California some time ago. And we see Tesla shares bucking the lower trend on Wall Street today, closing up 73 cents at $249.23. If you're just joining us, the Dow tumbled 533 points today, settling at 40,665, coming off an all-time high. The S&P 500 slipped 44 at 5,545, and the Nasdaq down 126 at 17,871. The yield in the 10-year note now is back down to 4.19%. Mercifully so, because that's the one that impacts the fixed-rate mortgage rates, which have now moved to the lowest we've seen since the middle of March. Taking another look at the cryptos now. Let's see how we're doing here with Bitcoin. And let's bring that one up here on this screen now. We see Bitcoin at the moment up about $500 at $64,019. Ethereum up $20 at $3,434. And Doge hanging in there at 12 cents. The price of gold has hit record highs this week. Silver also got a pop above $30 an ounce. I'll talk about precious metals, rare coins, and more with the expert on that. Then that is Barry Stupler, who is the expert here in Southern California. Stupler and Company, Mint State Gold as well, and former president of the American Numismatic Association, longtime contributor to this program. Barry Stupler will be joining me here very shortly. But right now, let's get the latest on your ride this afternoon, 790 KABC. Mottek On Money continues here, 790 KABC. All that glitters is gold this week. Gold climbing to record highs. It's traditionally a hedge against inflation, and also central banks have been buying gold these days. We see gold getting up to around $2,480 an ounce this week. Silver also got a pop above $30 an ounce. Let's bring in the expert now, Barry Stupler. It's always great to have Barry Stupler with us here. Barry Stupler, of course, a longtime contributor to this program, precious metals expert, founder and president of Mint State Gold by Stupler and Company in Woodland Hills, and former president of the American Numismatic Association. Barry, thank you very much for taking the call here with the big news that gold has hit record highs this week.
Yes. I woke up yesterday morning at about 3 o'clock in the morning to see gold trading at $2,484 per ounce on heavy volume. So I called a good friend of mine in London who's a commodity trader and asked him, what's going on? What's causing this big sharp rise? He says, Barry, he says, you're seeing a lot of international banks getting aggressive. Obviously, central banks have been buying gold for hundreds of years and kept it as reserve. But recently, many of the world's largest independent banks have not been acquiring gold because it's a tier 3 investment on their schedule. But there's a thing coming out very shortly, which is Basel III. It's the third update of the Basel Accord, which governs and regulates banks, independent banks. And gold's going to be moving to a tier 1 in January of this year in Europe. And these banks are getting ahead of it by picking up their gold now, because China is out of the market because it stopped buying gold in May, and they're able to buy large quantities of gold at more competitive prices. And that's still, with the volume that's going on, it's just a tremendous amount of demand, which is taking this market higher. He thinks gold will be $2,800 to $3,000 by the end of the year, and I tend to, based upon what we're seeing, I tend to agree. I've done a lot of work on finding out more about the Basel III agreement, and I put it on our website under the investor education portion of our website. So if any of your listeners want to find out more about Basel III in terms of how it changes the regulations that affect banks and make gold more favorable to be held by banks, please go to our website under the news articles under investor education. You'll see 2 or 3 articles. Plus, I'm going to be writing an article myself over the weekend once I do a little bit more research, and it will be in our weekly market report on Monday. But this rally has got lots of feet under it. It's got lots of lead, lots of room, and I'm seeing gold move a lot higher. The interesting thing is other commodities like platinum and palladium are not getting any play, and silver did go over $30, but now it's back under $30 because it's not the focal point of much of this buying. But silver at $30 is a bargain, a major bargain. And if silver and gold continues to go up past 25 and 26, silver has to be on its tails, has to be moving up to $32 or $33 an ounce minimum. So it's just an interesting time to watch investors see what they're seeing what's going on. And the interesting thing also is that the U.S. commentators that talk about gold and why it's going up never talk about Basel III. They talk about interest rates being lowered in September. But that's what's driving the market, and most of the major buying is coming out of Europe, and that's where most of these international banks are central in European countries.
On the Air Live with Barry Stepler. Thanks for shedding light on that important aspect here, Barry. I knew we could count on you for this, and what you were describing also, if I correct me if I'm wrong, is in response to the financial crisis of 2007 and 2008. The changes in these guidelines that you're mentioning. Another factor certainly that could be a significant factor as the political winds are changing. President Trump has indicated that he would like to see a weaker dollar and has expressed that openly. And if that happens, that would also be bullish for gold, would it not?
Oh my God, yes, it would. A weaker dollar. If we see gold, if we see the U.S. dollar start to drop in regard to other currencies, the price of gold will just take off on a disproportionate ratio. So that's why I think my friend in London that trades commodities thinks that gold's going at least to 28 or 3,000 by the end of the year. And most of the U.S. market doesn't look at what's happening with Basel III. It changes the criteria for holding gold and lifts gold to a tier 1 asset, which is very favorable for banks. So you're right. In 2007-8 is when they started Basel with Basel I. A group of large international bankers and financial ministers got together after the disaster of 2007 and 8 and formed the first Basel I, and was basically a way to regulate banks internationally. Now they've had Basel II, and now Basel III is going to take gold to tier 1, and that's going to be a substantial amount of new demand.
All right, at last check, I see gold is up 18% since the start of this year. Silver, by the way, up 25% since the start of the year. And, of course, gold always gets attention when it hits record highs. But when things are quiet, wouldn't that be a good time to accumulate? Look at platinum, for example, which you noted is not getting much attention. It was lower today, down to $981 and change, and is actually down 2% since the start of this year. What about platinum and some of the other metals that we don't often talk about?
At some time in the future, they may be a good investment. That's why we put out the weekly market report. But I've been telling people to be in gold primarily and silver as a secondary investment. But platinum and palladium, like you point out, has been down this year on a $2,480 gold market. It doesn't make any sense, but there's just very little demand right now. The demand is for gold and silver. We're seeing that demand for platinum and palladium has not been strong at all.
All right, certainly gold coins have evolved for the retail buyer, right? What are people clamoring for these days?
Well, the popular gold coins are obviously the popular bullion coins are the American Eagle, the American Buffalo, those coins are popular. Other items that have certain advantages are the pre-33 U.S. gold coins and pre-33 coins that were made in Europe, like the French franc, the British sovereign. Things like that are very popular, particularly if they're at a low premium, which they currently are because of the fact that the dollar's been so strong. We can buy these. I acquire these directly out of Belgium and French banks at a fraction of, in terms percentage-wise, over what they cost me 2 years ago. So it really represents a good value. Plus, they have other definite advantages. So clients that are coming in, look, we present and give them their options in terms of what they can pick up, whether it be U.S. gold or European gold, and people normally walk out with a balance, and most of our clients are very happy right now. So It's nice to have a bunch of people calling and saying, why didn't they buy more? Why didn't you make me buy more? I can deal with that.
Yeah, let me ask you that, since you come face to face with so many people who are in there to buy gold and other products there, we, of course, have been talking about crypto a lot, blockchain, but gold chain certainly getting new attention with the price of gold at an all-time high. Anecdotally, at least, are you seeing people getting out of crypto and going into gold, or what's happening on the front line these days?
I've had some clients who have lost a lot of money in crypto because it disappeared. They either got frauded or whatever, and all of them have come back to gold, because when you buy a gold coin, you put it in your safe deposit box or you put it away. You own it. It's yours. It's an asset. It isn't an entry on a computer screen. So I've most of our clients now who ultimately played with crypto 2 or 3 years ago have come back, because now they really want something that has more safety and more security than crypto. I don't think crypto is going much higher. I think I would be surprised if it even held at this level for a while.
All right.
I think
you're going to stick with the gold chain instead of the blockchain, then, it sounds like. Barry Stupler, precious metals expert, founder and president of Mint State Gold by Stupler and Company in Woodland Hills, former president of the American Numismatic Association. Barry, thank you very much for those great insights and for joining us live here this afternoon.
It's just, if your listeners can go to our website and read the articles on Basel III, it'll be very educational.
Sounds like it. Thank you very much, Barry, once again. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow here on Mottek On Money, 790 KBC.
Every week, Michael Rosenbaum is getting deep with someone new on the Inside of You podcast.
Let's get inside of Kevin Smith. I can go to a movie and enjoy it, and I'm never like, I could have done that better.
Really?
Never. I started as a fan. I'll finish as a fan. And the difference between this iteration of Kevin Smith at age 53 and the one that most people met at the beginning of my career, back then, I would have told you all the movies that I hate, and here are the reasons why they suck. And you would never hear that from me today.
Inside of You with Michael Rosenbaum, wherever you listen.